Welcome back to your daily market breakdown. Today, October 14th, 2025, we're unlocking today's most significant market moves by diving deep into candlestick signals. This comprehensive report will deliver the timely market insights you need, focusing on formation counts by sector, industry, and capitalization, highlighting the day's most frequent bullish and bearish patterns. We will explore each highlighted formation, its time frame, and its market cap group with complete transparency on valuation, helping you navigate today's dynamic environment. You'll find actionable sentiment, a clear outlook, and a summary table for instant clarity on trend direction and potential opportunity. Let's get started. Today's market featured a notable rebound in major indices, with the S&P 500 and the Dow Jones Industrial Average showing particular strength. Volatility marked the early session, but this gave way to a steady recovery as key bullish candlestick formations began to emerge in leading sectors. The technology and consumer discretionary sectors led this charge, with major moves being measured primarily on the 30-minute and daily candles. This shift in momentum signals a potential change in market sentiment, which we will analyze in detail. Our first sector is technology, which saw significant buying pressure throughout the day. The sector was dominated by bullish patterns, most notably the bullish engulfing formation, which appeared frequently on both the 30-minute and daily charts. These patterns were especially prevalent among large-cap constituents. A bullish engulfing pattern occurs when a small bearish candle is followed by a larger bullish candle that completely engulfs the previous candle's body. This pattern signifies that buyers have aggressively stepped in, overwhelming sellers and suggesting a potential reversal from a downtrend or a continuation of an uptrend. The consistent appearance of this pattern in large-cap tech stocks points to strong institutional buying and renewed confidence in the sector's growth prospects. Moving on to the energy sector, the price action told a story of indecision. We observed multiple doji and harami formations, which highlighted a pause in the prevailing trend. These patterns were captured mostly on the hourly and 4-hour timeframes, indicating short-term uncertainty among traders. A doji is a candlestick with a very small body, where the open and close prices are nearly identical, signaling a standoff between buyers and sellers. A harami pattern consists of a large candlestick, followed by a smaller one contained within the body of the first, suggesting that the previous trend's momentum is fading. The prevalence of these patterns in the energy sector suggests that investors remain cautious, with many stocks trading at or below their perceived fair value on longer timeframes. Next, the financial sector presented a mixed but leaning bearish picture. We saw a combination of bearish engulfing and hanging man structures, primarily on the 1-hour and daily charts. These bearish signals were especially concentrated among mid and small cap names within the sector. The bearish engulfing pattern is the opposite of its bullish counterpart, where a large bearish candle follows and engulfs a smaller bullish one, indicating sellers have taken control. The hanging man is a single candlestick pattern with a small body, little to no upper shadow, and a long lower shadow, which can signal a potential top or resistance level. The presence of these patterns, particularly in smaller companies, suggests that while the broader market recovered, certain segments of the financial industry are facing headwinds and potential downside risk. Taking a closer look at the technical interpretation, the bullish engulfing patterns in the S&P 500 were a key tell for today's recovery. Notably, these formations appeared at 10 a.m. and 10:30 a.m. Eastern Standard Time on the 30-minute intervals, signaling that early buyers were stepping in with conviction to reverse the initial morning weakness. This provided a strong foundation for the rally that continued through the session. The intraday recovery strength for blue-chip stocks was reaffirmed by the prevalence of 3 white soldiers patterns on the 30-minute chart for the Dow Jones, and the emergence of a morning star pattern on the 5-hour time frame. The 3 white soldiers pattern consists of 3 consecutive long-bodied bullish candles, each closing higher than the last, which is a powerful sign of a sustained reversal. And the morning star is a 3-candle, bullish reversal pattern that forms after a downtrend, confirming a potential bottom has been established. Together, these formations painted a picture of broad-based strength in the market's largest companies. Conversely, the indecision signals within the energy sector, as seen in the repeated doji structures, suggest investors remain cautious. This hesitation is noteworthy, especially as many energy stocks are trading at or below what is considered their fair value based on longer-term metrics. This combination of undervaluation and market indecision could be setting the stage for a significant move. and traders will be watching for a clear breakout signal in the coming sessions. Now, for our sector and industry highlights. In technology, the dominant candle was the bullish engulfing pattern, seen on the 30-minute and daily intervals, most frequently within the large-cap group. The sentiment is decidedly bullish, though the sector is considered slightly overvalued after today's run. The consumer discretionary sector also showed strength, with the three white soldiers pattern dominating on the 30-minute and daily charts, also concentrated in large-cap stocks. The sentiment is bullish, with these companies considered to be fairly valued. In contrast, the energy sector's dominant patterns were the doji and harami on the 1-hour and 4-hour charts, mostly seen in small and mid-cap stocks. This translates to a neutral sentiment, with many of these names appearing undervalued. Finally, the financials sector showed bearish signals, with bearish engulfing and hanging man patterns on the 1-hour and daily charts. Particularly among mid and small cap stocks, the sentiment is bearish, even as many of these constituents are also considered undervalued. Overall sentiment improved significantly as the day progressed. The emergence of powerful bullish patterns in leading indices, like the S&P 500 and Dow Jones, confirmed that intraday buyers regained firm control following losses from the prior session. This decisive action in large-cap leadership provides a positive tone for the market's immediate future. However, the energy and financial sectors warrant close monitoring. The current undervaluation in several mid-cap and small-cap names, coupled with the indecisive and bearish pattern structures we've identified, highlights an increased opportunity for value rotation in the coming sessions. Should market sentiment continue to improve, capital may begin to flow into these overlooked and undervalued areas, creating potential entry points for discerning investors. The market outlook remains cautiously optimistic. The reversals seen today are likely to persist if we see follow-through buying tomorrow that supports the notable bullish patterns formed on the daily and intraday charts. The key will be whether the momentum generated in the technology and consumer discretionary sectors can broaden out to include other parts of the market. To summarize today's action, our table shows the technology sector had 7 bullish candlestick formations, including 6 bullish engulfing patterns, and only 1 bearish signal, primarily on the 30-minute and daily intervals in large-cap, overvalued stocks. The consumer discretionary sector had 5 bullish patterns, including 5 three white soldiers and 0 bearish signals, also on the 30-minute and daily charts for large-cap, fairly valued stocks. Energy was mixed with 6 neutral patterns, like the doji and harami, and 2 bearish signals, seen on the 1-hour and 4-hour charts for undervalued small and mid-caps. Lastly, financials skewed bearish with 4 bearish signals, including 1 bearish engulfing and 3 hanging man patterns, against only 1 bullish signal, on the 1-hour and daily charts for undervalued mid and small caps. In conclusion, today's market was defined by decisive bullish reversals in key sectors, especially technology and consumer discretionary, with the daily and 30-minute intervals providing the clearest and most actionable signals. Undervalued opportunities are now most notable in the energy and financial sectors, particularly within small and mid-cap industries as measured by the repeated doji harami and bearish engulfing patterns. Track these hotspots as momentum builds, matching pattern duration to your trading strategy for improved guidance in tomorrow's session. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial investment or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.